welcome back to my favorite channel. Right now I want to say about to answer these questions. I'll focus these questions more on gold. To answer these questions, I'll focus the discussions more on gold. Gold pricing manipulations is defined as any international effort to control the prices of this most precious metal. This supposedly happens in major financial markets when gold traders internationally attempt to influence gold prices via certain financial instruments, particularly derivatives. These traders may have been able to successfully cause short-term deviations from the real values of gold, but over the long term, it doesn't appear to be so. The United States Securities and Exchange Commission's SEC defines manipulations is greater details as any international act whose purpose is to trick investors by artificially affecting or controlling the market for a specific asset and includes activities like quote rigging and voluminous traders or transactions that are meant to paint a deceptive impressions of demand for a particular asset and sway market prices in their traders' favor. And when speaking of gold pricing manipulations, there's one particular type of manipulations that is believed to be prevalent, and that is price suppressions, i.e. manipulating gold price downward. A really good question to ask then is, are the prices of gold and consequently silver manipulated? If you ask enough number of gold traders or investors, they'll tell you that it can be. Even more, they'll probably tell you that they are being systematically manipulated risks. This very moment, are they right? There are several iterations of this belief. One is that central bankers control the prices of previous of precious metals. Another iteration of this belief is that greedy private commercial bankers are the ones manipulating gold prices downward through derivative instruments, short selling, and future contracts. And high volume trades mean to paint a scenario of low and decreasing demand for gold and silver. When you look at theories like this, they seem plausible at first glance because of instances where gold prices were controlled in the past, such as when certain governments fixed the prices of gold for decades, or when the London Gold Pool suppressed its prices. Add to the fact that very rarely to the financial institutions get penalized for gold pricing manipulations, and you have a very prevalent belief that indeed gold and silver prices can be manipulated. But if you look at the long-term price stories of gold and silver, it becomes exceedingly clear that the answer to our questions is no. prices of these precious metals can be manipulated. Check out academy Check out academic papers on the subject and you'll find that no compelling evidence for the case of prices pressions or manipulations exists. In fact, you'll find you'll find very clear cyclical patterns if you check out the long-term price charts of these two precious metals. From a long-term view, particularly of the 2000s, you'll probably believe that prices pressions for these two precious metals existed. And when you think about crying wolf, you may start to wonder why manipulations is selective, i.e. manipulation is responsible when prices go down and when prices are going up, it's the market that's pushing it up. And while we can disprove the belief that the world's biggest players attempt to manipulate prices, their effects, if any, are very short-lived because it's practically impossible to suppress the true market price of gold in the market. Those who want to suppress the price of gold and silver over the long haul simply don't have enough financial resource to do so. And any attempts to do so will only backfire soon, because any significant drops in the prices of gold and silver will only increase demand for it and consequently lead to an increase in their prices. Next, shorting selling many investors and traders of these two precious metals tend to certain financial institutions, particularly bullion banks, of next short selling in order to put downward pressures on prices. But does next short selling mean selling some things you don't have? So, if you talk about short selling gold bullions, it means you're selling gold bullions you don't have yet. No, why would you sell something you don't have yet and get into a whole lot of trouble for it? After all, isn't selling something you don't have considered fraud? Well, not really. You may not have the gold bullions yet, but you can borrow other people's gold bullion to sell them. And when the price of gold bullions drops, you can buy the same amount of gold bullions you borrowed for short selling and in the process make money. Okay guys, until for today, see you in the next video. Bye.